Hey, good evening everyone. This is Trader Tim, eminimind.com, October 3rd, 2016, bringing you a Monday market analysis video. Not a whole lot on the news front for tomorrow. I believe Thursday we have jobless claims, but nothing too big going on tomorrow on Tuesday. So if you're tuning in to the trading room, we should have a pretty good morning of trading. The reason I say that, aside from kind of a lack of news, which, sometimes lack of news can end up being a slow day, but in this case, we are closing in on the apex of the triangle right here. And typically when this happens, that means we get some sort of breakout or a big body candle, a more violent move. Think of it as all this pressure is building up, building up. We've got the bulls pushing the market higher, the bears pushing the market lower, and they're kind of pushing, if you were to picture your hands out in front of you, open-faced, pushing towards one another, and as soon as they about touch, things are going to explode. And so because we failed the short 50% retracement above us, I can draw that like so. Because that short failed, but the long overnight 50% retracement is holding. If I throw on the extended session, you can see that. The overnight's holding. At this point, we're looking for the market to move higher, up towards the 2190 level. The 50% retracement being at 2136.50s, and that target taking us up into those most recent highs. We didn't come all the way down to the large retracement from the big major low in June to highs. So given that this is holding, we're going to look for a bounce at the 2136s, this little triple. We had 1, 2, 3, 4 touches down here at 36.50s, so we'll look for this to start breaking previous day's swing highs and taking us up into the most recent highs. If the swing lows break, if this 2129.95s breaks, then we'll look for the market to come down to 2086s. But in the meantime, looking for rally in the markets. And that could happen as soon as tomorrow, as soon as this week, because we're coming tighter and tighter and tighter towards the apex. Let's look at a couple of other indications here. The S&P, you'll notice a bigger volume since we got into September. And same with the Dow. And these up days have seen stronger volume as of late compared to the down days, so that's a good sign for the bulls. NASDAQ is already kind of up at those highs relative to the S&P. If we go back, we see the S&P highs, and where we're trading is below that. And then same with the Russell, acting a little bit stronger up towards those most recent highs, whereas the S&P and the Dow are a little bit lagging in that. From a volatility standpoint, things are pretty low, down in the mid-teens still, so that's looking good. And let's look at some individual stocks like Google, kind of same triangle at the apex. Apple, bull flag, so also a great opportunity here in Apple to maybe get long for a potential breakout. Some other stocks like Netflix already seeing that big move or that breakout from a triangle pattern or a wedge pattern. So lots going on in the markets that are pointing towards the upside. As always, we like to plan for both scenarios, bullish and bearish. So our line in the sand will be this swing low down here, the 2127s, kind of just below the swing low at 2132.75. So that area, if this low breaks, then we'd look for a big body candle to the downside and perhaps pausing at this 2086 level. And that could happen over one day, or it could happen in a couple days. Typically, if we break from an apex like this or a ascending triangle, the move will happen pretty quickly. So feel free to tune in to tomorrow's trading room, emonymine.com/VIP, and we'll talk to you in the morning.